Right, hi everyone. Welcome to our webinar today. So thank you for joining. Give me 2 ticks, just get everything sorted out here. So today we've got the second in our webinar series here at Crunch. We've got self-employed mortgages, dispelling the myths. So what we want to try and do is put to bed some of those myths that you guys might have heard about getting a mortgage as someone that is self-employed. So we've got some really good content here for you today, so hopefully you guys get something out of it. Right, so let's kick things off, I suppose. Here we go. So first of all, I'll introduce myself. My name's Ben Schaefer. I'm the sales team manager here. So I and my team are responsible for supporting new accountancy-specific clients through their accounting sign-up process. So I answer questions about how people should be structuring themselves, be that a limited company, sole trader, umbrella, whatever way you want to work. I can kind of guide you on that path, help you with company formation, answer your question, just really get you set up on that journey into being self-employed. I'm joined by our mortgage expert, Jamie. So he's one of the senior mortgage consultants here at Crunch. He's really responsible for making sure that he's searching the market, making sure that when he's getting you guys a mortgage, he's getting you the best possible mortgage at the best rate in relation to your circumstance. So Jamie specializes in, again, that self-employed market, but that's not just who you can help. You can help anyone really, but I guess you've got an eye on that, and a skill set on that self-employed market. So what's going to happen today? It's going to be a pretty straightforward structure in terms of how it's going to work. There's going to be some myths that we're going to throw up on the screen that relate specifically to freelancers, contractors, directors. We'll then give you a bit of a summary at the end in terms of kind of tips and things to bear in mind when you're looking for a mortgage. We're then going to go to a live Q&A section. So on that note, on the GoToMeeting widget there, you've got a questions drop down where you guys can get your questions in there, ask them at any point. We've got some people on hand to make sure that we're getting the right questions, and we'll do our best to answer all of those as live as we possibly can. If we don't get to your question, if we don't kind of manage to get there in the time allocated, we'll make sure that we respond to everyone after the webinar and make sure that you're getting the advice that you're looking for as well. So get those questions coming in. We'll do our best to answer them during the webinar. So a little bit about Crunch. So Crunch started back in 2009. Originally we started as an accountancy firm to help small businesses change the way they did their accounts. So moving from a traditional structure to an online subscription model. And over time that model grew. We've now got over 10,000 accounting clients, and we've really started to challenge what it means to be an accountancy firm. So on that note, we've recently gone through a rebrand, and what we've done is we've brought the other kind of suite of products that we offer really to the forefront to sit right alongside our accounting products. So obviously we do accounting, that's what we've done for a long time, but we also do business insurance. So we've got really competitive business insurance specifically designed for those that are self-employed. You can buy online, get set up in 5 minutes, covers you for what you need. We've got an investments and pensions product where we can advise you on how best to invest your money and start getting your money working for you. And then of course mortgages as well with Jamie and the team of guys here who can search that lender market to make sure they're giving you the best possible mortgage out there for someone that's self-employed. So I think over time there are a lot of myths out there from the big lenders about self-employed mortgages and not being able to get a mortgage if you were self-employed. So that's what we're here to do today, I suppose, is to break those down and get you guys some answers. So let's kick things off and start looking at some myths that we've heard from freelancers specifically. So let's go over to you, Jamie. So the first one we've got here is banks don't like self-employed applicants and they'll lend less as a result. Is that true?
No, it's not strictly true at all. So general lending limits across the market, 4.5 to 5 times income is it's fairly standard. We have an exclusive product which gets up to 6 times income at the moment.
Okay, well.
So what the key is really, it's not the banks will then be less, it's how will the banks assess my income.
Okay.
So we're going to be touching on it shortly, but it's going to be, I'm a limited company director, they're only looking at my personal drawings, they're only lending me 2 times income, 3 times income. We will look at your personal position, and we'll match you with a lender to maximise your borrowing up to what you need, plus on the most competitive terms.
Okay. And when you're talking about lenders, do you guys still have access to the same lenders that the rest of like a normal high street broker would have?
We're whole of market.
Okay.
So they're pretty much covering 98% of the market. Got all your regular high street banks that you'll see when you walk down the street.
Yeah.
Plus a number of exclusive lenders. These are lenders you can only access through a broker.
Okay.
And because of the level of business we do, we get exclusive products as well.
Okay. Cool. So I think you've answered that one there. So let's move on to the next. So I can't get a mortgage without 3 years worth of accounts. Is that true? I've heard that a bit.
No, yeah, that's kind of one of the most common questions we get. Newly formed businesses, where it's 1 year, 2 years.
Yeah.
Everyone thinks they can't get a mortgage for 3 years. Not strictly true. So we have lenders that, in the main, we use 2 years accounts.
Okay.
However, we do have lenders that we use just 1 year's. So if there's a good set of books there that shows it's a strong business, there's no reason why the business won't trading at the same sort of level, then we can use just the 1 year's accounts.
And when it's 1 year's accounts, does that need to be prepared? Can I have prepared those myself if I'm a sole trader contractor? Do they need to be done by an accountant?
So if you're a limited company, it's going to need to be done by an accountant.
Yeah.
Via a recognised body.
Yeah.
Such as someone like Crunch. If you're using a bookkeeper, unfortunately, if a lenders want a reference, they're not going to accept. Okay. They're not going to accept your bookkeeper. Sole traders, freelancers, then you can do your own tax return online, or Crunch can do it for you. Again, 1 year's tax return we can work with. Okay, great. That's really good. So lenders will average out my last 2 to 3 years accounts, even though my business has grown. Now, we see this a lot where people's businesses start small and go through that really rapid exponential growth phase. How's that going to work if you're looking for a mortgage? Yeah, so some of the more cautious lenders in the market, that they will look to protect themselves, make sure they're not over lending, and they will average your last 2 years figures. Like you say, it's not great if you're a startup business or you're in an industry where the growth is outperforming the rest of the market. We have lenders that will look at your latest years. Okay. So it's all about sustainability. Why has the business last year, tripled in turnover? So they're looking, has there been in the first year major investment in websites, infrastructure? So again, it's knowing the lenders to go to. Yeah, sure. I suppose that's where you come in, isn't it? Where you're able to advise people and have that industry-specific knowledge. We do it on a daily basis, these sorts of scenarios, so we know which lenders to go to, how to position the case, that's key. Make sure the underwriting's smooth and you get your mortgage offer soon. Okay, great. All the more reason to go to you, I guess. Right, so now let's move on to, we've got a lot of contractors that we speak to here at Crunch, a lot of contractors on our books for an accountancy product. So we touch with a lot of contractors. So the first one we've got here is, I can't get a mortgage if I've just started contracting and don't have accounts. Is that the case? No, so we work with a lot of professional contractors. So what I mean by that is clients working in IT, project management, the kind of more specialist roles. People tend to be on the kind of like 3 to 6 to 12 month type contracts. Okay. So providing the client's got experience in the industry, so that may be where they've been in an employed role, decided to go to contract because they like the flexibility, can earn more, kind of control the roles and projects they work on. We can use the contract income. So the lenders will actually gross up your day rate over the year, and they'll lend on essentially your turnover, projected turnover. So we don't need to use the company's accounts on that basis. So typically, if your income's over 75,000 a year gross contract value, we've got a wide range of providers. Okay. We have providers that will work with less than 75,000. Have no minimum. It's all about
kind of your track record and sustainability.
Okay. So proving that you're an industry expert, and that's what's going to happen, continuing moving forward.
Exactly. Yeah.
Okay, fantastic. That's really good. That's really good. So even I, as an accountancy advisor, hear this question a lot. So it's people are trepidatious out there. So it's good to hear
we have it a lot where clients are being told they need to go permanently employed to get a mortgage. Totally not the case at all. So we've done mortgages for people that have been literally in their first week of their first ever contract. Wow. But they've been working in the industry for 10 years. At the end of the day, a contract on a professional is pretty much the same as what it is employed. You could be employed and lose your job next week. So lenders, there's obviously a recognition in the market for these specialists like IT contractors.
Great, perfect. What we got here? So I won't be considered for a loan if I've had a gap of 8 weeks between contracts. So again, a lot of contractors like the flexibility of being able to pick and choose when they work a little bit. How's that going to work if I'm looking for a mortgage?
The key things to remember is, if you're looking to get a mortgage, is you want to give yourself kind of maximum exposure to as many lenders as you can.
Yeah, sure.
So ideally, if you can limit contract gaps between 4 weeks between each contract, maximum, then you've pretty much got the whole choice of our contractor lenders to work from. If you've decided you're going to go on holiday for 2 months, or a number of different reasons, and you've had 8 weeks off or 10 weeks off, we do have access to a few lenders that can consider up to 12 weeks gaps in a 12-month rolling period. Okay,
so that's a rolling 12 months.
Yeah, so you can't have 3 months off, work 3 months, have 3 months off. That's going to be difficult to do. But like I say, if you've had the summer off, gone back to work, pretty much you're working solidly for the rest of the year, then we've got lenders that can
Happy days. That's really good. Right, next one here is a contract value below 50k will prevent me getting a loan. True or false?
False. So again, goes back to what I was saying, it's about track record. So it's less than 50,000, and ideally you need at least a 12-month period. Okay, to show that you're used to working in this sort of environment, it's regular, it can be a mixture of whether you're on a monthly contract, 3-monthly, or even weekly. Weekly can be a little bit tricky because you're having to be quite well prepared that as one contract finishes, another starts.
Line up,
So if you tend to find that you do a couple of weeks here, have a break, another couple of weeks, it can be difficult. So it's, again, if you're looking to get a mortgage, try and keep your contracts rolling, regular, minimize the gaps.
Okay. Open-ended contracts, are they going to have any detriment to you getting a mortgage?
Ideally, you need an end date. So we see people in contracts that have been doing it for 2 years. It may be for the mortgage, you may need to have it kind of rewritten for an end date. However, we do have lenders that will work with open-ended contracts. Again, it's all about track record. So if you've been doing it for 12 months plus, we've definitely got lenders that will work on an open-ended contract.
Okay, great. So it's all about individual circumstances, isn't it? I suppose it's about guys getting in touch with you and describing what they've done and not making these assumptions on their own.
Exactly. The phone number will be at the end. Very quickly, within 5 minutes. We can tell you, where you are now, give you some advice. Where you need to get to, give you some advice. Very quickly. It's not a long process. We'll just get some open, honest advice.
Great. Now, just things around kind of directors of limited companies as a whole. Taking the minimum salary and dividends from my company will affect my application. I know that's generally the way that people extract funds out of the business. Is that going to play a role, or?
This is a common scenario we get. We often find it sometimes with clients using other accounts other than Crunch, where their accountant is almost telling them to take a large dividend. Obviously, so their income on paper is higher. Which is fine if the income's there to take, but the client necessarily doesn't want a huge tax bill. So we have, using our knowledge, we have a number of lenders that will assess the application based on what you could have taken in that year.
Okay.
So they look at your actual share of the business profit. Plus your salary.
Okay.
So it works well with people keeping their dividends at the threshold for low rate tax. So like I say, we have lenders that will assess based on the company
individual
profit, which
circumstance.
really helps with people. A,
Yeah.
it keeps their tax bill down.
Yeah.
B, it helps with that level of the borrowing they may
Well, that's
need.
a win-win then, I guess, isn't it?
Of course. I mean, if someone's struggling financially or they need extra funds for affordability, we're not doing anything wrong because the funds are there to take should they need them.
Yeah, sure. Okay. I think we're on to summary now. So if you want to give us a summary and maybe, you know, like a snapshot as to things to bear in mind for people that are looking for that.
Yeah, of course. So contractors, no minimum time contracting. Ideally, you're going to need to have an income over £75,000 a year. Unless IT based, there can be a bit more of a degree of flexibility. If you're earning under £75,000 a year gross contract value, not a problem. Just we're ideally going to need that 12 months history, track record, just to show the lenders that, you know, it's going to be sustainable for them. Company accounts. So whether you're sole trader, limited company, we don't need 3 years accounts. We don't even need 2 years accounts. We can work off 1 year's accounts if you need us to. That can also be the same scenario. We can work on the latest years. So you had good growth last year. You know, your investment in your business is paying off, and we can use that latest years. You know, we've got to be sensible. It's got to be sustainable. Yeah. But we can do that still. What we just touched on, limited companies out there, limited company directors. We don't need to base it on your personal drawings. We can base it on your salary plus your share of profit for the latest financial year. That's a real key one there. And then last one on contractors. Remember, up to 12 weeks cumulative gap over the last 12 months rolling.
So 12 weeks over 12 months, pretty easy to remember. Right. Look, that's all really, really good and helpful information. I'm sure that all of you got some benefit out of that, and hopefully it answered some of your questions in an overarching sense. But I think we're going to try and move on to some live questions that you guys might have sent in now. So let's have a look, have a scan through and see what we've got. So we've got a new question here from the webinar. Let's have a look. Hi, I've been told by my mortgage advisor that I would not be able to move house and get another mortgage due to having less than 2 years worth of books. Is that true?
Again, no, totally incorrect. We kind of often find this with some brokers who aren't kind of, you know, well versed with the self-employed market. We definitely have lenders who will work on 1 year's accounts. Simple as that. Yes, we can do it.
Okay, sure. Get in touch. Right, we've got another one here. Apologies for my ignorance here, but when a mortgage provider asks for your income as a freelancer with a limited company, do I input the amount my company took for the year?
Okay, so limited company, there's two ways of doing it. So freelancer, we can use limited company accounts, whether it's salary, dividends, share of net profit, salary. If that fits what you need, then fine. However, if we're going to contractor lenders, we're going to use your annualized day rate over typically a 46 to 48 week year. Okay. So essentially, it is almost like your turnover.
Yeah, sure. So it's your day rate over the year. Okay, got you. So what else have we got here? I'm now coming to the end of a discount period. When I first took out my mortgage, I was in a permanent role, but now I'm a freelancer. If I stay with the same lender, will I need to go through an affordability check on my self-employed income to get a new deal?
Okay, so when we review these sorts of scenarios, there are two things we do. One, we will look at the existing provider. So we have access to the lender's retention products. If you're simply just changing the rate on your mortgage, there will be no underwriting. Okay. So we can switch it on your behalf with a simple signing of a form. However, if we can change you to a different lender, make you a bit of a saving on that, not a problem. You're a freelancer, you were employed before, you must have obviously got the industry experience. We just use your contract value. Okay.
So if there's savings to be made, you guys can help them with that. Amazing. Right, what have we got here? So let's have a look. I'm in negative equity and I want to switch my mortgage provider to get a better rate.
Not something we see a great deal of negative equity these days because of the recovery from the credit crunch. They're on 10 years ago now. So negative equity is rare. However, on that sort of scenario, you're probably going to be looking at a product retention with your current provider. Okay. So some providers will actually look up to 120% lending if you're negative equity. Okay. unless you're able to kind of almost chip away at the deposit to get yourself down to the,
Yeah, sure.
the 90-95% mark.
Okay. Let's have a scan through here. Okay, here seems to be a good one. I've gone from employed to self-employed since I took out my current mortgage, which is up for remortgage soon. I'm earning more as a contractor, but can I expect a large interest rate because of the employment status change? Is it preferable to stay with the same lender or search the market again?
Okay, so I mean, given the current market, it's unlikely you will have a large interest rate rise purely because rates are lower now than they were 2 years ago. Worst case scenario, we switch you with a product with your current provider. It's going to be comparable to the market. However, like I say, you're on a contractor basis now. We have plenty of lenders that we could switch you to, you know, top 5 lenders in the market to give you something really competitive. So definitely something we want to speak to you about.
Okay. What else have we got here? I think I saw one coming in. Since I had my limited company, I predominantly had one major client each year. Is that frowned upon rather than having multiple clients?
If we're using a limited company accounts, then the lender won't go into much detail source of the turnover. So whether you've got 1 client, 10 clients, 1,000 clients, they're interested in looking at what your turnover was, expenditure, and what your profit and salary is. Saying that, if it's 1 client, it may be on a contract, so it might be better off just looking at the contract basis. Okay.
Let's have a look. Is there any more? This is quite a good one. I'm currently doing freelance work at evenings and weekends alongside my full-time job. Will lenders take both my full-time and freelance income into account?
Okay. In this sort of scenario where you've got multiple sources of income, where it's a mixture of PAYE employed and maybe some freelance work, you're going to need ideally a 12-month track record.
Yeah, sure.
So we're going to need your latest year's self-assessment tax.
Self-assessment as well.
The lender's going to want to be sure that you just simply haven't taken on an extra bit of evening work to boost your income for a mortgage.
Okay. Let's see if there's anything else. Okay, so my wife is not working. She's taking care of our baby. I included her in my limited company. She has 50% shareholding, so she can take dividends. So we have less tax on dividends overall. How will this affect my search for a mortgage?
Okay, so husband and wife, so you know, the business, the income is for the household. So the only thing to be key here is that she hasn't been made a limited company, so a director of the limited company last month, for example.
Yeah.
Because on Company's House, she's going to be shown as a director for a month.
Yeah.
So ideally, she's going to need to be on the Company's House for a year.
Okay.
For that to take benefit. So if you're considering putting your wife on as director, it'd be good to speak to one of the brokers here first. Obviously, your client manager and accountant, to make sure what you're doing is obviously the most tax efficient and your plans for a mortgage. But you ideally need to be listed as a director for a year. We can use that to get those differences.
Is it easier to use a broker versus applying to the bank directly as a contractor?
Totally. I mean,
thought that might be the case.
Well, obviously, I'm going to say that, but not all banks will have contractor criteria.
Yeah.
So some banks out there, Barclays, such as, they will assess you as self-employed and need 2 years accounts.
Yeah.
So what we find is a lot of clients who go direct, you'll have at least a 2-hour interview.
Wow.
Yeah. So if you think about doing that to 5 lenders, you're going to need a lot of time to do that.
Yeah.
We can tell you in a snapshot within 10 minutes.
Okay.
A, we can do it, and we then do the necessary research to get your best product.
Wow, 10 minutes you can get that quick?
Yeah. Also, the benefit about using a broker, we can replace cases instantly. So for any reason.
Yeah, sure. You've got that kind of thread, don't you?
So
yeah.
We can just resubmit it to another provider.
Okay. Interesting. Look, I'm a little bit conscious of time, so I think maybe we think about wrapping things up now. But if there's anything that you guys we haven't got to, we will answer those questions after the webinar, just to make sure that everything is handled, and we're going to make sure we contact all you guys, give you a recording as well, so you can refer back to this
once the webinar is over as well. So just a few things to round off, I guess. We've got an online community that we've got now for those that are self-employed. It's really aimed at small businesses, self-employed people, micro businesses, I suppose, small business owners. Jump on our website. It's crunch.co.uk/chorus. You're going to have access to all sorts of things like white papers, invoice templates, software. Give you invites to other things like webinars, meetups that we've got, discounts on things like insurance. So please go in and join that Chorus membership. It costs you nothing, and there's a load of information in there that you'll probably find beneficial. If you've got any more questions, if you want to talk to Jamie or one of the team, get in touch with us. The number's 033 3311 8020. Jump on the website. You can get the mortgage guys on the website too. I and my team, some of the mortgage guys, are going to be at the business show, which is at Olympia in London on the 16th and 17th of November. If you want to book in some time to speak to me or Jamie or anyone really, just get in touch. We can book something in for you, or even just swing by and say hello. So lastly, next webinar is going to be on the reaction to the summer budget, the autumn budget. So I think that will be quite an interesting one. It'll be on the Monday following the budget announcement. So it'll be the 27th of November. Invites will be going out to that soon. So log on to that. I'm sure you guys are going to get have a load of questions. It'll be in a very similar format where you can answer questions as well. So I suppose that's it from us today. Thank you for joining. Any questions, get in touch, give us a call. But hopefully we'll see you again soon. Cheers.